Interesting pattern showing up here. Bitcoin's getting chopped up right now, trading below that $79,000 level on macro fears and some serious ETF outflows. We're seeing key support at $78,000 and resistance sitting around $82,000. What's really interesting is the positioning here. We've got super leveraged longs, but shorts are piling in aggressively, which could be setting us up for a proper bear trap. The macro picture isn't pretty. That US 10-year Treasury yield just ripped to 4.6%, and the 30 years over 5% now. This whole higher for longer narrative is killing appetite for risk assets like Bitcoin. Plus, you've got Iran war uncertainty adding to the jitters. That hotter than expected PPI at 6% really hurt, wiping $90 billion from crypto in an hour. Here's what's concerning though. Spot Bitcoin ETFs just bled $1 billion in a single week, snapping that 6-week inflow streak that pulled in $3.4 billion. Capital's rotating towards AI stocks, showing institutional money is flowing out of crypto for now. Even Harvard dumped its Ether ETF and cut IBIT holdings. But here's where it gets interesting. The estimated leverage ratio just surged to 14.9%, meaning traders are borrowing heavily for bullish positions. This makes the market vulnerable to sudden liquidations. However, long-term holders are showing patience, adding 316,000 Bitcoin in the last 30 days. Technically, we're stuck in this range. Bitcoin's struggling around that $82,000 resistance and trading below $79,000. The 4-hour chart suggests downside risk as long as we're under $78,203. But there's a divergence between price and open interest, with negative funding rates which often precedes a short squeeze. If we break $83,000 convincingly, I'm looking for a long entry targeting $87,000 with stops below $81,000. If we lose $78,000 support, consider shorts targeting $74,900 with stops above $79,000. That's what the data is telling us.